Hello everybody, welcome back to Clear Surf Financial Education. So today I want to discuss what else? The squeeze that's going on. I will leave links if you need to get caught up. I'll leave links to the video I did last Tuesday on the GameStop short squeeze. Then Thursday I talked about SPACs. There's another video for that. All this is telling me there's a lot of froth, a lot of money sloshing around the market right now. The SPAC video kind of explains how hedge funds are raising money, not even knowing what their target's going to be, but they're raising money so they can merge with one of these targets and they can go public in 3 to 4 months versus 2 to 3 years. I go into a whole video on that, check it out. But I'll get back to the short squeeze now because some really interesting things have taken place here in the last couple of days. Number one, I'm gonna look at GameStop because that is the stock that's been in question. This stock was $37 back on the 21st, so a week ago. It was $37. That got squeezed to the point where it moved up to, on the 26th, just 2 days ago, hit 100 bucks. So 37 to 100, the squeeze is on, and this is happening because the shorts had 140% of the float short. You'll see this in some of the previous videos as I talked about, 140% short. So they had shorted multiple shares. And this created a position where those hedge funds that did this were getting just extremely greedy, if you ask me. Well, some people on Reddit's Wallstreetbets picked up on this and they targeted them. And that's been causing this push to go higher and higher, which is actually just popped recently. I mean, it was at $350 yesterday, intraday, $350, and then overnight last night, they took it up to $513. On the open, it just sold off like an hour before the open. Yeah, 6 o'clock in the morning was up 500 bucks. By open, it was only up 250. So anybody that bought that after hours at 500 got crushed, which is why some of the media folks have been saying this is a bad thing. All this volatility is not a good thing for the market because there's too much froth and a lot of these people jumping in are just following momentum. They don't have any idea, especially if they're using options, of what that can do leverage-wise, and how much pain can happen very quickly on an option when it's leveraged, because a few dollars of an option going down can cost thousands of dollars. So that's something that can really get hurt. Even if you buy the share outright, at 500 bucks overnight and you wake up and it's at 250 when the market opens, now I'll say they ran this up. Now what happened overnight, which is the most significant thing about this video, is the interactive brokers and Robinhood is the big one for a lot of these people because they can buy partial shares. So Robinhood and interactive brokers restricted trading on GameStop, Best Buy, BlackBerry, which is BB, Bed Bath Beyond, BBBY, and AMC, the movie theaters. All these five were targets. They were heavily shorted and all the people kept piling in. I mean, they were just running these up. And so when they restricted them so that you can only close out positions, you can't open up new positions, and you can't buy options on margin. So in order to do that, you have to have a significant amount of money to cover the margin. So they're making it 100. I heard even one broker made a 300% of the money has to be sitting there for margin. So that kind of takes away a lot of the leverage. It also puts the little guy at a disadvantage. And of course, right away, people were all over Reddit, all over Twitter, just blowing up, really irate that the brokers did this because they figured they've been taking it to the man. The whole premise so far has been they're taking it to the man, they're taking money out of hedge funds. And I read somewhere that was almost $5 billion lost on GameStop alone, where one of the biggest shorts, which was Melvin Capital, one of the heaviest shorts, they actually had to go to 2 other hedge funds to borrow near $3 billion to cover his loses. And so now you've got people are really happy with the whole Robinhood mentality. Think about it. The little guy is making the big guy lose billions of dollars, and that's getting spread out. Now, I'm kind of mixed emotion on this because I don't want the market to be a wild, wild west and jumping up and down like 100% moves either direction in one day. But I have to be honest with you. I read some of the tweets or some of the threads out there, and I saw someone say, hey, I made enough money in the last 2 days that I just paid off my college loan. I read another one said that I just made enough money, I wrote my mom a check so she can get a surgery she's been waiting for, or a disease treatment for Lyme disease, I think it was. So you're seeing these kind of plays. There are people out there that have come into a windfall by just following people in, and they've made a lot of money. And I feel good for those people that made a lot of money, and they follow the recommendations. If they followed my video from a week ago, they made a shitload of money. And that's all great, and I love hearing their story. But I just know also there's going to be someone out there that bought at 500 and got in way late, and it rolled over. Now the same thing's happening with AMC. That's another one of the stocks that was restricted. This stock was basically, let me get this over here, get rid of that drawing. This was a $3 stock on the 21st, so a week ago. $3 stock that they pushed this one up overnight to $25, and that was yesterday before the market opened. So $3 to 25. Market opened, it dropped all the way down to 10, ran it from 10 up to 20, and in overnight hours it now imploded. Because of this restrictions, they've squashed it. It's now down from overnight of 22 down, hit as low as 7.5, and looks like now it's back up to 10. So I wouldn't be surprised if people come in and start nibbling on AMC again, because it is a cheap stock. It's not near as shorted. The float is only, or short interest I should say, is only 40%. So not 140%, where they had to go borrow billions of dollars to cover, but 40% in a very cheap stock. And literally, I think yesterday, 1.2 billion shares traded hands with a B. That is insane volatility, insane volume. And, so that one took place. Then BB is another one, which is BlackBerry. They were running BlackBerry. That was also a $12 stock that yesterday hit 28. Today it crashed from 26 overnight down to 14. Now it's getting a little bit of momentum here. So you're kind of seeing that what's going on. There was like 4 or 5 stocks, but even like Express, another retailer that's basically on the verge of going out of business. I don't think I had that ticker symbol in here loaded. I don't know that one off the top of my head. I'm gonna take a shot at a guess maybe. Anyway, that one was like $1 stock, and they ran it up to 10 bucks. So that was a little bit crazy. So here's something you might want to think about. Everyone's chasing these other stocks. I'm going to give you an idea that is not being talked about as much, but Square has been one of the darlings since the bottom of the market. I'm going to pull up a 1-year chart. Square basically was a $32 stock that ran up to 246. Now that thing has pulled back. 246 was the high on the 8th. So basically 20 days ago, hit the high. It had been falling now, and it hit its first Fibonacci, which is basically a 23.6% retracement. So hit the high, pulled back to the Fibonacci almost perfectly, went down as low as 198, and today it's up to 216. So it's rallied $18 from the low today to where it sits now. The reason why I bring this up is I heard some chatter earlier that there was some talk that maybe Jack Dorsey, who runs Twitter, also is the CEO of Square. You can actually buy cryptocurrency on Square and PayPal. So he was one of the first ones out there as a fintech, a online financial service company, to actually give people access to buy crypto, and that's what made crypto explode. One of the reasons it made it explode. He's saying that Robinhood should not have done what they did. They should not have restricted people from buying and selling. They should make it a free market. So I wouldn't be surprised. I can't give you financial advice. I'm not your advisor. I'm just giving you some ideas and things that I'm watching and hearing. You're at your own risk and peril to jump in, but I like the sounds of that. I think with this thing pulling back, this Fibonacci are very, very important. 23.6, 38.2, 50%, 61.8, 78, and then 100%. Those lines, I've followed it for years. When they hit one of those lines, they're pretty accurate as far as getting some attention, kind of as acting as a support level. It hit that support, just beautifully, and bounced off there. So anyway, if Jack Dorsey has anything, if he's going to put his money where his mouth is, he allow people to trade cryptocurrency somehow on there. I don't know, maybe he'll figure out some way to allow the little guy to start investing in a few stocks or something. I don't know how he can do that because they're individual stocks. But anyway, I wouldn't be surprised if this thing gets some momentum because of all the people who are now outraged that their broker is saying, you can't buy this stock or you can't buy these stocks. You can't use leverage. You can only close out positions. So I think it's going to be interesting. So Anyway, interesting stuff. Now, I have to say, yesterday I watched Fed Chairman Jerome Powell, and I was watching this, and I was watching the market. It was creeping up, or we keep touching this same 3850 on the S&P. And every time we get up there, we lose steam. Yesterday, the S&P fell almost a little better than 2%, between 2 and 3%, lost 100 S&P points. So fell off pretty hard. So what happens today? Boom, right back up. Everybody jumps back in and rallies. So as I've always been saying, for long-term investors, don't try to time it. Stay in the market, because Jerome Powell just told you they're leaving rates low. They have no inkling right now about raising rates. So rates are low, money's cheap. There's so much free money sloshing around. That's why you're seeing these huge market moves. Little guys trying to get in and make a buck, especially people that have some bills piling up. Hey, I feel good for them. They're making some money, and bills are piling up, and they're jumping in, squeezing some billionaires. Doesn't hurt my feelings. You know, those people are living pretty cushy lifestyles, so having a little taste of a bad day, you know. Anyway, that's why Robinhood is called Robinhood. Both let the little guy level the playing field. And with all the information that's out there, the accuracy of having real-time quotes, I mean, there's people out there that you can educate yourself, and I encourage you. I have a course below that I created that you can learn about stocks, bonds, how to budget, retirement planning, estate planning. If you want to be smarter about finance and not just follow the momentum, I've created a course. The links are down below. It's only $47. And those courses will take you a little more than 2 hours to go through all those courses. You'll be so much more educated on the process. And then if you want to get into more detail about anything in there, you can contact me and we can work on that directly. So anyway, that's it for today. I just want to let you know some of those stocks are still moving fast and furious, but be careful because you're not being allowed to open up new positions. So you're probably not going to see the same volume as you did. And once these shorts cover, I think they'll wash out the next day or two. Everyone needs to cover, probably will. And I think it'll come back down a little bit, but I wouldn't be surprised, like AMC, it's an $8, $10 stock. I wouldn't be surprised if they still get behind some of these really cheap stocks that they can actually afford to buy 100, 200, 500 shares and push them for a couple bucks and squeeze some more money out of the market. We'll see. We'll see how it plays out. But anyway, watch Square. I think it's going to be an interesting play over the next month. All right, everybody. Till next time, take care.